Good morning, everyone. I'm Sarah Collins. I'm the technical MD for a company called Rift Research and Development, and I'm going to be talking to you today about the changes to the R&D scheme as a result of not only the autumn budget, but the spring budget earlier this year. So in short, it's an incredibly complex scheme. It's just become entirely more complex as a result of the changes that are coming into place from the 1st of April this year. So for those of you that know about the scheme, you could, until the 1st of April this year, have an enhancement of 130% on your qualifying expenditure. That rate has now decreased to 86%. In addition, for those of you that have already claimed and have been in losses, you would have been used to surrendering those losses for 14.5%. That rate has now reduced to 10%. So the scheme for the SME can and has been largely reduced, as you can tell. The good news is that the RDEC scheme has in fact been increased. So where a large company claiming before was claiming at 13% against their qualifying expenditure, that now is 20%. That is good news, not just for those larger companies, but also for those SMEs that have received or are about to receive a grant. So you are now able to claim against that grant funding at a higher rate, which is great news if that's the process you're going through at the moment. Those changes will come into place from the 1st of April and affect all expenditure on or after that date. So even if you are partway through your year, any expenditure incurred after the 1st of April will be applied at the newer rate. For those of you that have a March year end, that's relatively straightforward. However, for those of you that have got a December year end, for example, the first 3 months of this year, you would be able to claim against the higher rate. That's 130%. And from the 1st of April, it will drop to the 86%. And excuse me, sorry. As you can see, that's partly where the complexity comes, because we are looking at a situation in which the rates are changing, but equally so are the corporation tax rates. So when looking at a claim, we have to look at not only the change in rates, but also the change in the corporation tax rate. So if you are largely in profit, actually that will go some way to mitigate the reduction in the amount that you will receive. And the same goes for the RDEC scheme. The people that will be most impacted, sadly, will be those in the high-tech startup space that are traditionally in loss. But there was further good news as part of the spring budget, where it was announced that for those companies that can demonstrate that 40% of their spend goes on research and development related activity, they can now apply for the R&D at a higher rate. So in essence, what's going to happen is that you will be able to get 27 pence back in the pound, whereas that would have been 18.1 previously under the new guidelines. Excuse me. So those changes have been talked about. They've not yet been legislated. So it may be that for companies from the 1st of April, you may have to claim under the current rates and then retrospectively go back, but we're hoping that that will be legislated very soon and will enable those R&D intensive SMEs to actually claim at that higher rate. As you can see, as I've said, an incredibly complex picture with R&D at the moment. There were other changes that were announced prior to the autumn budget, and they included the inability to claim against any subcontracted costs that you may have had on overseas companies. So in essence, that would, as an SME, prevent you from claiming against those costs that you may have incurred outside of the UK. Now, as part of the spring budget, they have delayed that for a further year. So that's good news for those of you who have got subcontractors outside of the UK. It means you can start to look at other ways in which you may be able to employ them, or you may be able to find companies within the UK that are able to do the same work for you. Additional changes that have been announced as part of the spring budget were a conversation around the consultation that was launched. So as many of you may know, there was a consultation launched that was due to look at the application of a single scheme for R&D. So in many ways, this would actually make this arena far less complex. So it would look to put everything under one scheme. Now, at the moment, we have the SME scheme, which is for the small and medium-sized enterprise. And then we have the RDEC scheme, which is for your larger companies, and it's a research and development expenditure credit. So the way that the two of them are worked out is very different, and the way that they are applied to your accounts is also very different. The SME scheme is a below the line calculation, so it's part of your tax calculations, whereas the RDEC is an above the line revenue stream on which you are taxed. So there are very distinct differences between the two schemes. The RDEC scheme equally doesn't allow you to claim for your subcontracted costs, whereas an SME is able to where that relates to their R&D activity. So the consultation closed on the 13th of March. We were hoping that we would get greater clarity as part of the spring budget, but what they have said is that there will be an announcement later in the summer surrounding that consultation and the way in which they intend to move forward with that. Now, we're hoping there's, as part of the next fiscal event, which is likely now to be in November, as part of the autumn budget, we are hoping that there will be greater clarity surrounding that single scheme and whether or not that will be implemented as of the 1st of April 2024, which is what has been suggested, or whether or not there will be a further delay on that, given that HMRC are struggling at the moment to keep up the current amendments with their legislation changes. It will be really interesting to see whether or not they are able to, within a year, put together a single scheme for implementation from the 1st of April next year. As I say, that will make things much, much easier to understand from both a client and agent perspective. But there are some changes in there that may have an adverse effect on SMEs, and that includes a single rate, which may again be reduced from the 86% that we will see from the 1st of April this year, and whether or not those subcontracted costs and how those subcontracted costs will be treated. We know, as of today, we know a lot of R&D is going unclaimed because there may be a situation in which an SME is working for a larger company. They're unaware of the R&D that's taking place by the SME, and yet under current rules, you are unable to claim against your subcontracted costs. So an RDEC company can't claim the subcontracted costs, and equally an SME can't claim if they are subcontracted to another company. So there is a situation there in which a lot of R&D is going unclaimed and unrecognised, and it may be that as part of a new single scheme, that situation is tidied up and we can see that the R&D that has been undertaken will be covered, but we have yet to see whether or not that will be the case. So in essence, it's an incredibly complex area. And if you do wish to seek advice and to understand those complexities and to ensure that you are both compliant and eligible in terms of what you are doing, you do need to seek advice. The way in which HMRC currently are applying the criteria surrounding the guidelines is incredibly rigid, and we need to be sure that you as a company are absolutely claiming for the right things, are doing the right things. And in order for you to be compliant in this current environment, we do suggest that you do talk to a specialist in the field in order just to ensure peace of mind for both you and the company, and that everything that you do will go through to HMRC, because what we're also seeing at the moment is a mandatory random inquiry program in which reports are being picked at random and inquired into. So what we want to ensure is that our companies are compliant, that they have covered everything that HMRC wish to see in a report, and that report, when it goes to HMRC, is far less likely to be considered in any way fraudulent, certainly, but equally so that it's seen as hitting all of those things that HMRC want to see. And in particular, that you've demonstrated that you do have a technological or scientific advance, and that you have a very clear idea of where your product, your service, your process deviates from the current baseline. So in what way have you managed to improve or enhance, not just for your company, but also for your field? So in short, in summary, given the complexity, given the current climate within HMRC, we would absolutely suggest that you reach out to someone, and if not Rift, another advisor, but clearly, preferably, we would like it to be Rift. Thank you for watching. Thank you for your time. And I'm sure we will be doing this again very soon. And certainly if there are any further updates, we'll be sure to keep in touch. Thank you.